Welcome to The Explainer. So, if you've been navigating the financial markets for any length of time, you intimately know that constant grinding battle. You know the one. Anticipating a sudden market change versus just riding the wave that's already in motion. It's literally a daily struggle, right? Well, today, we are shifting our entire focus. We're stepping away from making those risky, speculative guesses that market bottoms or tops. Instead, we're going to master the art of trend continuation. We are unpacking a specific, highly structured approach directly from today's source material. It's called the Silver Strategy. Let's get right into the analysis and see how this totally changes the way we look at price action.
Okay, I want you to reflect on your own recent trading habits for just a second. Ask yourself, are you picking reversals or are you hopping on trends? You see, there is this really dangerous tension in the markets. It's kind of like a psychological trap, and honestly, it catches absolutely everyone, novices and veteran traders alike. It's that constant tug of war between the ego-driven desire to be the very first person to spot a massive market reversal versus the disciplined, let's be honest, often boring patience of just hopping on a trend that's already doing its thing. Think about your recent trades. Are you exhausting your capital, your mental energy, and your time just trying to predict exactly when a market is going to turn around? It's a super common hurdle. But as our source text clearly shows us through historical market data, man, it is absolutely not the most efficient or profitable path to success. No way.
And this brilliantly illustrates the core conflict we're resolving today. So, on the left side, you've got picking a reversal. This represents that high-risk trap of guessing market turns we just talked about. Honestly, it's like standing right in front of a speeding freight train and just hoping it stops because you're standing there. I mean, sure, you might get it right once in a blue moon, but the statistical probability is strictly against you. And the damage when you're wrong? It's severe. Now, on the right side, we have hopping on an existing trend. This is the smarter, much more calculated choice of joining established market momentum. It requires patience, yeah, but it offers a much smoother ride. So everything in our explainer today is completely anchored in shifting your methodology away from that high-risk guesswork and securely over to the calculated momentum of established trends.
Part 1. The Silver Strategy, moving into trend continuation. So, what exactly is this framework that solves our reversal picking problem? Well, the Silver Strategy is, at its core, a high-probability trend continuation strategy. For those of us focused on efficient learning and actual repeatable results in the markets, those two words, high probability, are literally everything. We aren't looking to trade every single possible setup, right? We're definitely not taking leaps of faith based on gut feelings or some obscure indicators in choppy markets. We are hunting for the exact right setup. The source material emphasizes heavily that this whole framework is built around validating the continuation of a directional move that the broader market has already clearly decided to make. Basically, you let the market show its hand first, and then you act.
The whole goal here is to literally hop on an existing trend. I really love the specific wording the research uses here. That phrase, hopping on, it implies the vehicle is already moving, The momentum is already established. The absolute heavy lifting of changing the market's direction, that's already been done by massive institutional volume. You're not out there trying to create the energy from scratch, you're just aligning your capital with it. It's all about leveraging the immense advantage of momentum over the massive friction of trying to predict a reversal point. It's a profound shift in mindset. It completely takes the pressure off you to be some sort of market psychic. Instead, you just get to be an objective market participant.
Okay, let's dive into this. Part 2. The mechanics of the trade and its execution parameters.
So the crucial point is, while mindset is incredibly important, we need rigid structure to actually execute these trades. Your very first objective in the strategy is to identify the latest broken swing level. This is your core visual indicator. Look, a broken swing level tells you that the market has successfully pushed past a previous point of heavy contention. It's the market's definitive way of confirming, hey, this trend has enough underlying strength and volume to break structural barriers. If the price was previously rejecting at a specific high or low and then suddenly pushes violently right through it, boom, that level is officially broken. If you can't identify this latest broken level on your chart, well, the setup simply isn't there yet. Don't force it. It is the absolute structural foundation of the entire trade.
And this builds into a really nice logical workflow in 3 distinct steps. Step 1. Find that existing trend. Remember, we are hopping on momentum, not guessing where it will start. Step 2. Identify that latest broken swing level we just talked about, just to ensure structural barriers are actively being cleared out. And then, Step 3. Ensure multiple tests of that level. This workflow is exactly how you should be scanning your charts every single time you sit down at your terminal. It takes all the subjective, messy emotion out of the process and replaces it with a cold, hard, objective checklist. But
We do need to look a bit closer at that third step, because ensuring multiple tests, that's where the verification truly happens, and it's where the low-probability trades are successfully filtered out.
Moving on to Part 3, the verification rule. Let's look at how we actually validate the setup.
Now, what's really interesting about this slide is we need a foolproof way to officially verify that this setup is indeed a high-probability trade, right? Not just some temporary market fakeout. So to verify the setup, we rely on one specific, absolutely undeniable number, 400. In the context of our source material, this isn't just some random arbitrary figure thrown out there to sound precise. No, it is a strict, definitive boundary rooted in actual market behavior. It represents the exact candle count required for your look-back period. By defining this, the strategy builds a very specific window of time and price action that we have to analyze to successfully validate our broken swing level. Because, let's face it, without a rigidly defined window, evaluating past performance just becomes completely subjective. So let's break down exactly what 400 means in practice. You literally must look back at the last 400 candles on your specific charting time frame. And within that constrained window, you have to objectively ensure that the broken swing level has been tested multiple times. Now, why does this matter so much? Well, statistically speaking, a level that has been repeatedly tested and held within a significant 400 candle window totally proves its structural importance to the broader market. It shows that institutional capital is out there actively defending or reacting to this specific price point over a meaningful stretch of time. It's not just a momentary algorithmic fluke. When you combine an undeniably existing trend, a freshly broken swing level, and the historical verification of multiple tests within the exact parameters of the last 400 candles, you have officially isolated the high-probability trend continuation setup that the silver strategy promises.
So I'm going to leave you with this final vital thought as we wrap up today's explainer. Will you keep fighting the reversal trap, or are you ready to hop on the trend? The source material we unpacked today gives you a clear, structured, and visually verifiable method to finally stop guessing and start intelligently participating in established momentum. It moves you from being a gambler hoping for a turn to a disciplined technician trading a continuation. The silver strategy is right there, waiting for you to apply it. The next time you open your charts, I want you to remember the rule of the 400 candles. Find that broken swing level and ask yourself, are you ready to hop on? Thanks for joining me, and keep learning.